This meeting is being recorded.
Good afternoon, good morning, everybody. We are going to start very, very shortly, just another 30 seconds or so, and then we'll begin. So just bear with us for a little bit more. So good morning, good afternoon to everybody that's joined today for this joint IUA and Oasis event. It's fantastic to have so many of you on, and I know there'll be a few more joining shortly. I would just like to hand over to start today's conference with an introduction from Cedric Lobo. And Cedric is, for those of you who don't know Cedric, he is responsible for risk for international for Transatlantic Re, and specifically for today, he's also chair of the IUA Climate Risk Committee. So Cedric, do you want to kick us all off with a few thoughts before we get going with the rest of the event?
Yes, thanks, Dickie. So just a little bit of background to the IUA. So the IUA is the the International Underwriting Association of London, and it's a representative body for London market insurance and reinsurance companies. The IUA was formed back in 1998 as a merger of the London International Insurance and Reinsurance Market Association, LMF, for those who don't recall it, and Institute of London Underwriters, the ILU. It's been around, obviously, for over 20 years now and celebrated 20 years of representing the London company market. A couple of things that are very relevant to today's presentation are some of the objectives that the IUA has. One of them is looking at legislation, regulation and compliance with obligations, particularly around areas such as climate change. For those that have an international as well as a local remit, climate change is now a much greater focused area. You will find everything from, be it the PRA through to the activists outside the Lloyd's building. There is a lot about climate risk that everyone is aware of. This is putting aside what you read in the newspapers as well as what various politicians say. So really the purpose of this is to have a discussion about models and how models can be helpful. I can say quite happily I'm probably the stupidest person on the panel, as I am a user of the information. I'm not a modeler. So I look at these things, and we will obviously discuss this as part of the presentation about the use and the importance and how how we can use models to drive decisions. I will stop there and hand back to Dickie.
Well, Cedric, thank you. That's fantastic. And thank you for the IUA for your support as well. I think this is a great opportunity to share some ideas. Just a couple little points. So you've all seen the agenda for today. So I'm just going to kick off with the 5 to 10 minutes, a little bit about Oasis, and then Ben's going to go into a bit more detail about how that actually works in practice. And then we've got a good hour talking about climate change. And if any of you are unsure about how understanding the impacts of climate change from an insurance industry perspective, or as the insurance industry, depending on who you are, you will find out an awful lot in about 20 minutes time. So that's the first thing. Second thing, really important, please, you are all welcome to join in the conversation. So you can use the chat function and you can send questions and comments to everybody. You can send them just to me if you want, or indeed any of my friends and colleagues on the panel. So so please just feel free to sort of chip in. It's not always that easy, of course, to have quite a large number of people sort of joining the conversation, but we're happy to try. And I might even later on see if I can get some little bit of audience participation. You've seen it's being recorded just because there are some people that couldn't make today and they did want to see some of the events. So that's the purpose of doing that. So I am going to kick off, as I've said, with a little bit about Oasis, because I think this sort of hopefully frames the conversation in general and later on when we get onto the climate change sort of panel. And there will be some of you that won't know that much about Oasis looking at the attendee list. So Oasis started 10 years ago. I'm its CEO, for those of you that don't know me, and I started it back in 2012. And it's some open source software, and that's sort of represented by this red planet on the right-hand side. So that replicates what most people would call a sort of cat modeling platform. And what makes it unusual, unique, and potentially very, very useful is the fact that you can get any model from any source, any provider, commercial or non-commercial, pretty much. We've not had one we couldn't do yet, available in this open source and free platform. So one of the things that does is lowers the barriers to entry for those people wanting to either commercialize their insight or potentially, if you're an academic, get your perspective of risk into a format that people can actually understand and realize, therefore, more quickly, potentially, what academia are really, really doing. And we're going to touch on that a little bit later when we come onto the panel on climate change. So, and we're going to talk a little bit more about models. As well as models, there's a whole series of standards, both inside and outside the software, particularly exposure standards. And I'm going to come onto that in a second. And Ben will talk shortly about how Oasis as a platform and the models in Oasis can be deployed. So I suppose the next question that we might all have is, well, okay, what's the real advantage of that, and why does this make sense? Well, I mean, I've touched on it once a little bit, but it gives you choice, and I would like to suggest that choice, when you're looking at models to understand risk, is really, really important. Not only because you might want a model from a model provider that you think is suitable for your risks, your portfolio. That could be one reason, of course. But secondly, you actually might want to use multiple views of risk. It's a shame that over the last 20 to 30 years, I think having multi-model use is something in the insurance industry that's happening less than it was because of some issues to do with costs and a few other things. But I think it's a shame, really, that we're not having more of that. So getting choices, I'd say perhaps maybe it's number one. I put here, we've got the best cat model platform in the market. Ben's going to talk about it in a second. What does best mean? Well, I would say that what we're really looking for here is reliability and performance, and Ben's talking about that, so I won't go any further. These common open standards, extremely important, I think, to be able to work around the world effectively without any restrictions because we might be using some commercial schema that actually we don't have full permission to do with what we wish, but also sort of flexibility because we need to have interoperability between any schema. And that's one of the things that Oasis has been working on with some friends and around the world for the last few years. So I'll talk about that in a second. I think when we started Oasis, one of the things we talked about was the sort of democratization of risk. And what we meant there was, particularly if you're in the global south or in critically vulnerable countries, how do you get insight into what your risk is? Really, really hard without spending a lot of money with potentially providers in the sort of global north. That's not ideal. So we developed the platform partly for use for those sort of countries around the world. And I noticed, I think we've got on today's attendee list a couple of people from Bangladesh who we worked with before, and I'll talk a little bit about that in a second. Being a catalyst for innovation is something that both our members and users think is important, and come to that, so do we. And a couple of examples, I suppose. I think that Oasis probably had the first climate condition catastrophe model available. We launched one funded by the European Union for the whole of the Danube Basin about 2 years ago now. And I think probably that was the first. I think we may have got the first one for a whole country, which is some of the work we did in the Philippines and in Bangladesh. Still refining, still working on the one in the Philippines a bit. And there are some other areas too that we've been working on for innovation. So it makes it easier for people to look at, review, and commercialize some elements of innovation that might apply to our business, or at least where it's relevant for modeling and exposure. lastly, or penultimate one, sorry, is about cost reduction. Not only have we centralized the funds from the insurance industry to produce a very effective open platform, which means that model providers around the world do not have to do that. But there are other ways that we can get cost reduction. So there's an efficiency angle as well. And lastly, just to a large degree, the models available on Oasis have a lower license cost than the main providers who've been around for about 30 years. So there's a lot of this, which is about reducing costs. And lastly, it's really easy to use and really easy to install. And Ben will talk about that in a second. So if they aren't compelling reasons why everybody shouldn't be using Oasis in some shape or form, come and talk to me later. Or in fact, speak now. I'd love to have anybody challenge that and say that doesn't make any sense. I think it does, and so do a lot of other people. So actually, on the topic of people thinking it makes sense, what are other people doing in this space? And I'm not going to go through an exhaustive list here, but this is a schematic that Allianz have occasionally used to show how they use Oasis. So essentially, it's not a replacement for other modeling platforms that they have. It's an adjunct to the ones they already have. But one of the things it does extremely well for many companies, I would suggest, is that actually for perils that are not currently modeled, it's a great platform doing that, because we have flood models literally for the whole world, except for Antarctica. So it's got a very, very comprehensive coverage. And we've got models, we've got new one coming on for cyber, and we've got ones for renewable energy coming on. Because it's quicker and easier, and we've got a much more diverse set of providers, we hopefully fill that gap really, really well. So that's what Allianz's view is, and this is a schematic that Swiss Re put out, pretty similar in concept if you saw the detail behind this. But again, you can see here their views are transparency is important, accelerator to full interoperability, increased choice, as I've already mentioned, and a community, which is extremely important, because it's the community that drives everything we do. It drives our development backlog for what we actually put into the software. It drives conversations like this one on climate change and what's happening there. We're talking about social inflation. There's not really a topic that probably many of you won't be thinking about that we don't have some sort of conversation about. And here's the last example of other people's strategy, if you like, around Oasis. So this is the Zurich one that was presented by Ivan Stalder in the RAA about a year ago. And you can see this is their list, his list and their list of reasons why it makes sense. So we'd love to have further conversations with any of you that think you want to take advantage, haven't done so. And hopefully we can have those conversations. So I talked about choice in modeling. This is a brief overview of the main modeling organizations that have models available in Oasis. You'll know many of these ones. People like CoreLogic have been around for a long, long time, pretty large organization. Sort of more niche ones like ARA, who have a fabulous US hurricane model. We got some academics in here like PIC, which is the Potsdam Institute, who built the model for the Danube. And we've got some brokers here like Guy Carpenter and Aon, of course, as well, through impact forecasting, who have models available. And a number of others. ERN, for those of you that a couple of weeks ago we had a session with them talking about their new models. So this is essentially the demonstration of choice, and there's essentially over 90 models from this group available, pretty much as soon as you want them. Nearly at the end of my piece, but this is an example of the standards that we curate. So we call the exposure standard OED, sits under a brand called ODS, being Open Data Standards. And we've got a steering group, which includes all the main modeling firms, all the main brokers, and some pretty large insurance and reinsurance companies. So these are the people that actually steer the development of these standards. And as it says at the top here, they're actually not Oasis standards. Oasis uses them as standards, but they're standards that are designed to be used by any firm around the world. And we're curating them on behalf of the insurance and reinsurance industry, because it's deemed critical that we have one set of standards that are completely independent of any commercial organization, owned and controlled by the insurance industry. That's what it's all about. And we've had property ones for a couple of years now, liability ones for a couple of months, and we're now working on cyber standards. And then after that, I think we're probably going to be doing marine. So we will shortly have a full complement of open standards. So that's enough on standards. Just a couple of other slides. I mentioned about the goal about the democratization of risk, as we would say. And we are heavily supported by the Insurance Development Forum, who, as many of you know, has a goal of a community of global insurers, UN, World Bank, and some others, to try and reduce the protection gap by 500 million people. And as part of that, the Risk Modeling and Mapping Group, which is the sort of modeling steering group within the IDF, has a strategy which is to use these open standards and to use the standards that sits inside Oasis as a way of enabling that democratization and as a way of helping, hopefully, to reduce that protection gap. And if you haven't seen, the link here is a paper that was written by a number of us that talks about how does this really work in practice. And I would encourage anybody that's interested in vulnerable nations getting a better appreciation of risk to the same standards as the insurance industry. That paper I would highly recommend. But we also have significant funding from the insurance industry, of which this is a headline of the most recent one, really. But essentially, Oasis is being built by about $20 million of funding. So it's one reason why we have an extremely good platform. And I was in Zurich earlier this week at the launch of this initiative, which is called the Global Risk Modeling Alliance, or GRMA. And the GRMA at the event in Zurich was an announcement by a member of the German government about approximately, I think the total is close to being 21 million euros that will be available for funding for the development of models around the world for vulnerable nations. And those models will be using the Oasis platform and the standards around Oasis, and possibly, and there'll be one or two other platforms like the global earthquake model, for example, that will be involved in that. So it's about open modeling with Oasis at the heart of all of that. So hopefully you can see from that fairly brief presentation that we've got a lot going on, and I think I'd like to suggest it's a compelling story about why Oasis has a lot of value. But to give you a little bit more detail before we do that, I'm going to hand over to Ben, who will tell you a little bit more, and then I'll check if there's any questions and we can do those afterwards. So Ben, over to you. Let me just see if I can stop sharing.
Okay.
Done.
Right, make sure I get the right screen. There we go, hopefully you can see that. Thank you, Dickie. I'm Ben Hayes, the CTO of Oasis, for those of you that don't know me. I thought it'd be worth, and this is really reinforcing a lot of what Dickie has just said, but just going over what Oasis actually is for those on the call who maybe haven't had as much exposure to as some of the others. So there are really three main pillars, as I see it, that we kind of look after. One is a set of open source software, which is mainly around the catastrophe modeling platform itself. We have a number of different pieces of software that sit underneath there. So I've listed some here: K-Tools, what we call OasisLMF itself, or the model development kit. We have a deployable platform, and we also maintain a kind of suite of APIs and an Oasis user interface, which is available. We do some work as well on data transformation, which Dickie alluded to there. So we do subscribe to the open exposure data standards, but we also provide tooling to map into and out of those standards to any other standards. And importantly, all of our code base, anything we write, is made completely open and available via GitHub. So anyone in the world can download and use it for free. There's no kind of license costs associated with using the Oasis software at all. Dickie's touched on the open data standards, the ODS, as we refer to them, the open exposure and results data. But I just wanted to draw out as well a little bit more about how we define model standards as well. So all of the standard kind of regular components of a catastrophe model, hazard, vulnerability, and exposure. We also maintain standards for those, which are all kind of open and available. And this allows the software to be pluggable, and it's very easy to either build models in Oasis or convert models to Oasis and get them into the framework itself, because it's really just a matter of representing those key hazard, vulnerability, and exposure data sets in the standards that we define. We do have a common financial module, which is kind of independent of the loss generation itself. And this is really important because you want a consistent interpretation of insurance terms and conditions across any model that you use. So we very kind of intentionally decouple the actual modeling and the generation of ground-up losses from the application of financial terms and conditions. So that financial module sits within the Oasis software, but again, it's all completely open and transparent, and it's driven importantly as well by the Oasis members. So we don't design that ourselves. We interview the Oasis members and see what they need and make sure we develop against that. The final point that I have in here that's a bit more subtle is about deployment. So we package up any Oasis models so that they are deployable in exactly the same way. And this is quite important for kind of third-party service providers. They don't need to know anything about how the thing actually runs. They can just take a standard set of assets belonging to a model and data and deploy them ready for their customers. And equally, model providers can provide those assets to direct customers of theirs, insurance companies and brokers, to run internally. And the third part that I just draw out as well is the community aspect, which we maybe don't talk about enough, but a lot of the Oasis drive is about bringing the community of CAT modelers together and CAT model users, and really building that community and building a thriving set of commercial offerings which can serve needs that maybe weren't that easy to access before. So typically we're looking at insurers, reinsurers, and brokers, but we're bringing those together with model providers, service providers, people like NASDAQ and Exceedance, and increasingly, as Dickie mentioned earlier on, academics. So we do a lot of work with universities around the world who are doing research in maybe climate change or particular type of modeling. If we can get that data and their kind of science into the Oasis format, then it's instantly accessible to the insurance communities. Just as a caveat here as well, I should draw out for those that haven't had much experience with Oasis, at the bottom here, we don't actually build or sell models ourselves, although we do kind of bring the community of model providers together with model users. We don't host models for production use. We do offer a service where we can host models for testing to make sure that any updates to the Oasis software don't adversely change the numbers. And we don't provide commercial support directly out of Oasis. We provide a certain level of support to the community, but if there's a commercial application, then we're not geared up to provide kind of full level support. But again, there are other organizations out there, and we're keen on building the community of those organizations to provide that support where it's needed. So very, very high level as well, just talking about some of the features. I've already talked about all of the code that we build is open source, which is very important for transparency. There's a big drive in the technology world towards open sourcing as much code as possible, because it forces developers to write good code if it can be kind of infinitely peer reviewed by anyone in the world. So open source code generally leads to good code, and it also allows other contributors to give back to the community if there are pieces of functionality that they want in there that potentially aren't in there. People can write that themselves and contribute it back, and Oasis will curate and maintain that code base in the center. We offer flexibility and choice. And Dickie's talked about this a lot already as well, but particularly around models. So there are a lot of third-party model providers out there, but it also allows you, running Oasis allows you to run your in-house models, if they're in Oasis format, kind of in parallel with third-party commercial models, which is quite unique. And then we can also get academics involved, as we've mentioned already, to get their science in the Oasis format. And you can run those three different kind of flavors of models next to each other in the same platform without having to overly burden your IT team with lots of different deployments. And talking about deployments as well, I've got a slide on this, so I won't go into too much detail, but there are lots of options for deployments there because everything's open source. You can run it in-house if you want. There are third-party providers that are available. We have APIs and a UI available, so you can integrate it systematically with the rest of your operations, or you can use the open source user interface by itself along with the platform, which we'll show shortly. Open data standards, I think we've talked enough about that already, but we do subscribe to the open data standards. They are decoupled from the Oasis software itself. So Dickie did mention, but I'd just like to stress that the open data standards exist in their own right, and Oasis software subscribes to them. He's already mentioned we are looking at cyber and liability and potentially marine, none of which we have any models for at the moment, but we feel it's important to curate those data standards on behalf of the industry and with input from the industry. And technically now, just talking a little bit about some of the extra things that we offer that maybe some of the other platforms don't, things like Monte Carlo sampling methodology. So Dickie mentioned that some of the other providers of platforms have been around for maybe 30 years. And I think when Oasis started, the vision was very much we should use the latest technology and the latest utility computation available to do much more sophisticated computations in there. So we do full Monte Carlo sampling, which gives us a richer set of outputs. We do have this independent open financial module, which we've talked about already. And performance is the last thing. So we do believe that we have the fastest platform available at the moment. I've got some numbers in the next few slides to show that. And some of the work we're doing at the moment on deployment options allows for dynamic scalability to make that almost infinitely faster, depending on how much compute power you want to throw at the system. I've mentioned the UI briefly, but I thought it'd be a good opportunity to break from the presentation and do a little bit of a live demonstration, just to show you what the user interface looks like and how you can use it. So if I pop across here, hopefully you can still see that. Just log in. So this is a version of the Oasis platform, which I've just deployed. Actually, you can see up here, I've deployed it on my laptop. So this is a kind of an example of how easy it is to get it up and running. I just set this up this morning with the latest version of everything. So,
and how long did that take to get it up and running on your platform?
I mean, for me, it was kind of half an hour, but I've done it quite a few times. There'd be a bit of reading to do if you'd never done it before, but it's possible to get it up and running quite quickly on a laptop. Got a caveat: if you want to run it inside an insurance company, I'm sure you'll have some hoops to jump through from the IT department to get access to servers or cloud or whatever. But actually getting it up and running is very, very quick. We have just a simple shell script that you can run that spins the whole thing up. So I ran a few tests here this morning to show how it looks from the front page. So this is a list of all of my previous runs going back. I can expand that out to look at a few more I've done. And just show you how we've kind of structured the UI, so you can see how it hangs together and the kind of logical interface. We have a 3-step process we tend to go through. One is generating a portfolio itself. So this is uploading the exposure data and looking at it. Next is running the analysis. So this is marrying that exposure data with a particular model of your choice, and then kind of pre-generating all of the exposure data in the format that the model will recognize. And then we can actually configure the output and run it and get the results as we'd be used to. So I'll go through those very quickly now, and this is running locally here. So I just create a portfolio and call it demo as an example here. So I can upload some files, and I'll pick This is the PyWin model, which is our kind of open source example model that we use for installation testing and training. So I'll pick a location file here. We can have a look at it in a second. I'll show you what it looks like. And I'll also drop in an account file with the terms and conditions in there. So we can have a look at these files from the UI itself. So if I just click on it, I can take a look inside here. It's opening up. So I can see it's not a massive portfolio because I'm just running an example, but 12,500 locations. These are all located in a town in the UK. I think it's all the locations in that town. But this is what the open exposure data location file looks like. So pretty standard stuff, some referencing to where the location is, latitudes and longitudes to identify it location-wise. And then we have some information about the perils that are covered, construction codes, occupancy codes, all fairly standard stuff in the OED, and then some total insured value information on here as well for these locations in this town in the UK. Right, so that's what the location file looks like, and the account file looks fairly similar. I've just got a couple of layers on a single policy here to show how that would work. So I've got kind of a limit and attachment points as you'd expect, a standard 2 different layers on the same portfolio. So uploaded those files, fairly simple. I can move to my next step and start to do something with it now. So I've got my files. I can then choose which model I want to use those exposure files against. I've only got one model loaded here, but typically you'd have however many models you've got listed down here. And we can create analysis here. Let's call it demo run and submit that. And the first step that will go off and do then is start to match that exposure data with how it's represented inside that particular model. So it'll be about taking those lat longs and figuring out where in the grid cell representation of the event footprints all of those locations are, and mapping the secondary modifiers to the vulnerability functions. And, it's fairly quick. That was only 12,500 locations, but it just took about 10 seconds there to run that. I can see that I've got my 12,500 have come through. I mean, I can take a quick look at that if I want. We do have a little bit of visualization in the UI just to help validate things have gone on. And it's kind of slightly interactive, nothing too fancy, but I can drill into locations. And if there are particular locations I want to see, I can get some information about that. All of these were successful, but importantly, if any of them weren't successful for any reason, if they potentially weren't covered by the perils in the model, or they were outside of the geographical area that the model covers, then we'd see red pins here, and the error message would tell us the reason for it being rejected. And that can be quite important if you're running portfolios against different models. You need to make sure that you're aware of how much of the actual portfolio is being modeled by the particular model you're running. So that was just the kind of data preparation step, which is fairly quick. And then we can move on to the actual execution. So I said it's a 3-step process, and the UI leads us through that. So I've got my analysis that I've created. I can configure the output. I've got a few different options that I can run here, a number of Monte Carlo simulations that I want to do, which event sets and occurrence assumptions I want. And these will vary by model, obviously. And then I can pick which outputs I want. So we have all fairly standard CAP modeling type outputs in here: event loss tables, loss exceedance curves, various flavors, annual average losses, kind of year loss tables. So I could pick whatever I want, and I can aggregate those outputs by whatever level I want from the input data. So I've got a list of all my input data fields here. I might say I want my ELTs by postcode and say, I don't know, occupancy code or something. So I can pick combinations of outputs to run my various reports at. I can pick many reports inside there as well. What I'm going to run now, I'm going to just jump back to the summary because that gives the most visual selection of outputs for this demonstration. And I can also pick my perspectives that I want. So I'm saying I want ground up loss, and I might want my gross losses as well, or insured loss. I had the option for reinsurance losses, but I didn't upload any reinsurance files, so there won't be anything there for that. But we'll kick that off. And now in the background, this will be taking that exposure data, mapping it to the model data that we have in there. This particular model has about 1,500 locations, 1,400, events that affect this particular town that we're talking about. 2 perils in this model as well. So we're running wind and flood at the same time. And we're in this particular model, we're just running 2 different coverage types, which is buildings and contents, but we allow for BI as well in there. But just that combination alone with 12,500 locations by 1,400 events, by 10 samples, by 2 perils, by 2 coverage types gives us about 700 million calculations that are going on in the background there. And you'll see that's completed in, it takes about 30 seconds, I think, in this particular example. And that's just running on my local laptop as well, just to stress that. So quite a lot going on in the background. Should click over now and we should be able to see what the results look like. So we've got, again, a little bit of visualization on what the results look like through the Oasis UI. You can see just how many locations were run, the total insured value. I've got some charting here of the EP curves for occurrence-based and aggregate-based for my ground losses, and equally for my insured losses that I ran. So my gross losses here by aggregate and occurrence-based, and I've got a chart of my average annual losses to look at there as well, again, both by ground loss and insured losses once those financial terms and conditions are applied. And I can also go in and look at the raw files themselves that have been generated. Just take a second for that to pull back into the UI, but I can view those through the UI. So my average annual loss numbers here, and I can export those, and I can export individual files, or I can select a number of files and zip them up and take them off to my desktop. So that's kind of how the UI works. Very whistle-stop tour, but hopefully fairly intuitive. That kind of 3-step process of uploading your exposure, marrying it with a model, and then running your analysis is fairly simple to follow and quite quick, like I say, even running on my laptop. So I'll jump back to the presentation quickly. That's what the UI looks like. Where were we? Up to here. So in terms of,
we're going to have to do the rest of it fairly quick, Ben, I'm afraid.
Yeah, 2 minutes. So deployment options, I think we've mentioned already. We've seen how you can run it on a laptop, so that was me just running it there. But exactly the same deployment works for on-premises servers or cloud deployments or hosted environments. So companies like NASDAQ and Exceedance and Impact Forecasting's Elements now can run Oasis models for you as a service. Talk very quickly about some of the work we're doing. So we're working hard to improve the performance, even though it's very fast already. We're rewriting a lot of the core components to take advantage of even newer technology than we wrote 5 years ago. We're seeing some really significant improvements in there. So 50 to 300 times improvement speed in our financial module over the last year, depending on the complexity of the terms. I won't go over the rest of it, but we're doing lots and lots of work to improve the functionality and performance. I've got some numbers here to show from a kind of year ago to now, just working on that core code base. These are real models running with a real kind of decent size 250,000 location portfolio, how we're going from kind of 50 minutes, 35 minutes, 25 to 15 on these real models. And then very quickly, the other thing we're just running on is a distributed architecture. So typically, these things will be run on a big server and the workload is balanced across that server, but we're working with a technology called Kubernetes to allow us to break these jobs up into lots and lots of small virtual machines, which are much cheaper to run for the same workload, but it also allows us to kind of dynamically scale very quickly and spin up lots and lots of other workers to break that job up and go even faster. And just jumping back, last thing to say is, as an example, this Guy Carpenter Canadian flood model went from 24 minutes to 15. We've got that down to just under 8 at the moment, running it on this distributed architecture. So we're getting very, very, very fast. Sorry, went over a little bit with the demonstration, but
No, that's fine. That's good. Well done. Look, that's brilliant, Ben. Thanks for doing that. I've just sent you a question from somebody about deployment. You can take a look at that. Might be work on it. There was a more general one about deployment too. So you might want to just post some of the stuff from GitHub about where that goes on if you've got a moment while we continue with the climate change panel. So last and not least, we're now going to move on to this discussion about climate change and how we can think about that as a community. And I'm just going to ask perhaps if each of the panelists can just give each of the rest of the audience, I don't know, 60 seconds or whatever you like about, what you do and where you're from, because you'll say something better than I might say, I'm fairly sure. So why don't we start? Cedric, why don't you go first, since you've already said a bit, but you can, I've said a bit about you, you can do it a bit more.
Okay, thanks, Dickie. Hi, I'm Cedric Lobo. I'm the head of risk for the international region for transatlantic reinsurance. I'm also, it's the reason I'm here, the chair of the IUA's climate risk committee, of which Tom Philp is also a member of. What do I do? Background is I used to work at Aviva then into Ernst & Young, part of their auditing and consulting. So I did M&A, capital raising, whole raft of different things. Been back in-house for almost 11 years now, and my remit covers everything from capital management to OASIS to climate risk and emerging risks. And sadly, I'm also our group lead on 12 different OASIS that we do around the world that have a very large component that looks at Nat Cat as well as man-made catastrophe risk.
Brilliant.
So I will pause then.
Excellent, fantastic, Cedric. Jessica, do you want to go next?
Yeah, sure. Hi, I'm happy to be with you all today. So my name is Jessica Turner. I'm head of international cat advisory at Carpenter. And what that means is that I'm leading a team of Nat Cat experts, and we look at cat model evaluation, but also climate change physical risk analytics for the international region, so EMEA and Asia Pac. We've recently been helping our clients answer the CBES, so the UK's PRA's stress test. We're also actively helping clients on their quantitative climate change analytics for their ORSA in Europe and for other regulatory and risk management activities around the globe. So I'm an atmospheric scientist by training. I did a PhD at McGill University looking at climate change impacts on Arctic weather. And previous to being at GC, I worked for RMS with Steve as a model developer and a product manager. And most recently, I was an underwriter at a UK primary Lloyd's banking group.
Which is fantastic. And Steve, since you're going to mention there, we'll go to you next.
Okay, great. Thanks, Dickie, for inviting me along today. And hello, everybody. Yeah, as Jessica mentioned, I used to work for RMS. I worked at RMS for 20 years. And for 15 of that, I was in charge of the division that builds the various climate and weather Nat Cat models. But I left RMS about 15 months ago, and I now run a small company called Lamba Climate Research. And it does what it says on the tin. We do climate research very specifically related to risk and insurance. So we write journal papers, we develop data sets, we produce software, and so on. So in the last 12 months or so, we've published a whole stack of journal papers about climate risk that you could read if you like reading that kind of thing. They're all freely available. You don't have to be a client because they're published in scientific journals. And then we have data and software we give away for free, and then some things you have to pay for. Probably our main product at this point is if you're running a hurricane risk model, which could be ARA or cat risk or AIR or RMS or anyone, then we have software that allows you to adjust the results of that model for climate change. And the thing about our software is that it's all based on transparent and peer-reviewed scientific methodologies. And there's lots of options and settings and so on. If I may, I'll just say a couple more words about what we do. I don't want to go on for too long, but I'll just say a couple of words about how we fit in with the rest of the industry, because there's a lot of companies out there that will sell you information about climate change, as you know, a dozen or more companies, and you could get a dozen or more different points of view about climate change and the effects on hurricanes or whatever. And obviously there's a big challenge for users of that information to work out which of these dozen points of view, which will all be different, which of them is really valid, which of them can you really trust, and they may well not all be valid, right? And it's actually very hard to know, and that's one of the challenges, is because virtually none of these companies publish any details of what they do. Okay, so you have to sort of take it on trust that what they're doing really does make sense and is scientifically valid. So we're doing something very different from that, in that everything we develop, we publish in peer-reviewed scientific journals. So all of our algorithms, all of our results, all of our methodologies are published. You can go out, you can read them, you could even code them up yourself if you really wanted to put in the work to do that. So it's all very transparent, and it's all quality controlled by the scientific peer review process, which is a very rigorous process, which can reject, your papers can get rejected if if the anonymous reviewers don't like what you're saying. Okay, so it's quite a high hurdle to jump through. So anyway, if anyone's interested in talking more about that, let me know. And while I'm here, let me just thank the various companies out there, people you'll know, who are already supporting this initiative to try and bring a bit more scientific rigor to insurance risk management, particularly in relation to climate change.
A good goal. Thank you, Steve. That's brilliant. Tom, last but not least.
Super. Yeah, I mean, Jessica and Steve have given a very similar background, I think. So I'm CEO of a relatively new venture called Maximum Information, which we aim really to empower decision makers, I would say, in the catastrophe and climate risk and climate change space, very much focus on that decision making aspect. So my industry background's in catastrophe model evaluation, building views of risk, also climate, microinsurance and weather microinsurance products and parametric insurance products. My academic research background beforehand was in European windstorm and also in the US in hurricane research. In the last few years, I've very much moved towards the philosophy side of things, largely because of the challenge that we're probably going to get into today, which is managing severe uncertainty. And often that doesn't require the most overly precise and brilliant science, but it does require knowledge of the endpoints to use appropriately. Yeah, I think that's probably enough from me, Dickie, and over to you.
Wonderful. Thank you very much, Tom. So for those of you watching and listening in, if you weren't convinced before that we've got an extremely good panel, I hope you are now. Just so everybody knows, we haven't got set questions specifically. We wanted to have more of a conversation, which we hope is both more interesting for all of you and a bit more sort of dynamic. But we have some themes, about 5 actually, which we will try and get through all of the themes today. And the first one is really around using probabilistic models for understanding climate change. And I think one might think about that in a number of different ways at a high level perspective. So there's like, can you look at very long-term climate scenarios in a probabilistic model? Is that something that makes sense? What type of functions should we be expecting for these probabilistic models to be able to handle? What sort of time horizons make a difference in all of these things? What about conditioning models or conditioning event sets, or even what the hell does a climate condition model actually mean? So maybe, Tom, I'm going to start with you, and you can sort of pick any of those sort of topics. But I mean, what's your perspective around some of the challenges about looking at probabilistic models on the subject of climate change, you think?
Okay, well, yeah, jumping into that limitations thing right away then, because there's so many ways you could take that question. But the limitation side, right, I think catastrophe modeling does a great job of filling in the holes in our current history to, as long as it's done well, to get representative events that we've seen and look something like history. I think one of the key things we know about climate change is that we're expecting quite significant changes in certain places with the footprints of events. And we know that the climate models at the moment aren't going to be changing in the ways that we haven't seen before. So that's one of the key challenges, I would say, in the limitations with models at the moment, that we can adjust them all we want for frequency and intensity, but if the events in the future don't look anything like they do today, we are limited. So that's the key, I think, challenge or the key advocate point for trying to move to climate condition models that can maybe capture these footprints. There's some really nuanced points that come out of that though, right? So there's certain event footprints that are potentially more fluid than others. So by fluid, I mean in the air almost, rather than the actual liquid. But if we think of a hurricane footprint, they're quite smooth over a large area and they'll change gradually with time, we think. But if we think about flood, it's much more of a sort of binary, you're going to get impacted or not. Flood defenses obviously impact a lot, but very small changes in the climate can cause very big changes in the footprints that we're expecting. So I would say that it's a really big limitation that we, in the current or traditional way, I should say, of catastrophe modeling, we don't pick up those changes in footprints, but it matters more for certain perils than others, and you have to be really aware of that when you're trying to build views of climate change risk. I mean, I could go into so many other things here on the time horizons principles, but I think there's probably a lot of other people's thoughts on that. So I might just let the rest of the panel chip in as well.
You'll be able to come back. I sort of feel there's a natural progression to Steve here, who I sort of feel might be having a burning need to add to that or take a different perspective. Steve.
Well, there's a lot of questions on your list, Dickie, and maybe some of them are more interesting. I don't know. So maybe we shouldn't spend too much time on this one. But I've just got one short comment on this, is that when you're using cat models, I think we should all be very careful not to over-interpret the results. So if you're looking at output from your cat model and you're looking at the 100-year return period and you're looking at the effect of climate change and you're discussing whether it's 2% or 3%, then you've gone wrong somewhere, right? Because you're totally over-interpreting the results, right? And I think cat models are great. They have the limitations that Tom talked about, but they do tend to naturally encourage people to over-interpret the results, right? And the cat models, they don't let you run the model a second time with different random numbers. If they did, you'd get a shock because the numbers would all be different, really different, right? And so I think that's a very important point to bear in mind.
If you start next week the Lambda reinsurance company, would you rather have a climate condition cat model that was more aptly dealing with the biases and the information we have on climate change right now, and or just change event sets from some other modeling firm? Is there a better way of doing that or a worse way?
I think if you want to know about current climate, then I think changing event sets is not too bad, because Tom's right that event footprints would change, of course, but have they already changed that much? I don't know. And hopefully, if you've got a good model, it will include a very wide spread of different kinds of events, including events that we've never seen before. And the advantage of changing event sets is you can do it 101 different ways, which is brilliant for understanding the uncertainty and the sensitivity and so on. You can do it for 2025, you can do it for 2030, you can do it using results from this paper and this paper and this paper, and you can apply them all in sequence very quickly and get some idea of the impact rather than having to rebuild your model every time, which is obviously not going to be feasible. But
yeah, no, okay, that makes sense. Jess, you're hand holding a lot of Guy Carpenter's clients in this space. How do you and how do you see this from the use of models perspective?
Yeah, I don't disagree with what Steve and Tom has said. I think from a practical standpoint, we have questions coming from the regulators that we must answer. So we're forced to do something. And that means that we are changing the frequency and severity of event catalogs in the current cat models in order to reflect what we think the climate change risk might be. It's a challenge for a lot of reasons. So of course, how do we make those adjustments? Well, we look at the scientific literature. What is the scientific literature saying about how an individual peril might be changing? Or sometimes we look at climate model output itself if we don't have a good paper. The papers and the climate model output is never exactly the same physical variables as you have in the cat models. And you also don't always have access to change what you might want to change in the cat models, like footprint size, to use Tom's example. So you have to make a lot of approximations, and depending on your methodology, you might get different answers. And I think that's the current state of what's being done. So I agree with Steve in the sense that you really shouldn't overinterpret. I see it as doing an order of magnitude calculation more than anything else.
Cedric, from a sort of, if you like, a user perspective, if that's the right way to look at it, anything to add on that?
Yeah, you know what? Being very sad, I'm going to agree with absolutely what everyone else has said. I think the most important message that came out from each one of those is do not over rely on what comes out of the model. There is so much uncertainty within the models. There's also challenges, and I'm sure we'll touch on this, regarding data and the actual quality of the data that sits behind it. There's also legislative as well as government changes that you sometimes have to consider, but it's a very important guide. And I think it's there as a guide. It's there to help decisions. It's there to highlight what the potential impacts are. But I think with all of these models, I can't remember, this goes back maybe a year, maybe 18 months ago, someone said models are a group of very smart people's best guesses. And that's the way to look at it. They are just best guesses. And it's really down to people to look at the output and think, is that right for us? Does it make sense? Go through the validation, go for the challenge, look at the kind of research that goes around it.
Thank you, Cedric. Well, look, let's segue into uncertainty a little bit more specifically here. Tom, I'm going to just ask you a question in just a second, but while you're thinking about how you might respond to that, actually, I actually want to make one point. I think that we're a friend of Oasis is Jeremy Hindley is editing a report at the moment on best practice around both regulators and on insurers and reinsurers. And after intensive number of interviews and everybody else, I think there's a couple of things we can say. So one is that the models we use today, the catastrophe models we use today, should incorporate an understanding, as we are aware of today, of how the climate is changing. Because why would you have a model that can't do A, B, and C very well, or even doesn't do it at all? So I think that's one thing that we're hearing in the marketplace. And I also think that actually trying to use a catastrophe model for long, sort of time series that says what's going to happen in 100 years' time isn't really a smart idea. So those two things are coming out. But just Tom, on uncertainty, we've got one question in, two asking about what's the level of model risk we get in catastrophe models. But overall, I want to add that into how do we deal with uncertainty? Do we know enough about it? Do we need different techniques to deal with it? What do you think?
Yeah, I mean, yeah, model. I don't know how to answer that model risk question. I would just say high, like very high. So I've just off the bat. But the level of uncertainty, it's the key thing, right? So yeah, I've just appointed a chief uncertainty officer. I think she might be on the call, Valentina Marco. She's worked with many people on this in this group. I think model vendors and model users alike. Really, I think it's the I don't know how to phrase it because I wouldn't want to say the ignorance. It's not ignorance about uncertainty, but it's the sheer scale of the uncertainty, even in the present, that means people have sort of allowed it to collapse away. And we haven't, frankly, as an industry, I think, talked about it enough that exists in the present. Now, when we then think to what that might change to in the future, I think everybody on this call will be sympathetic to the thought that there is no best estimate or single precise best estimate of the future climate. If you can tell me what emission scenario we're on in the next 50 years, I'll tell you what the lottery numbers are for this weekend, right? There's no way to predict it with any level of precision. So we only know that there's a space that we're moving into that's very uncertain. The reality to me is that we actually exist in that space in the present too, and we just aren't very good at talking about it. So I think the right way to talk about future climate change uncertainty is to first talk about the uncertainty that exists in the present and build that back into the present. But that's going to lead to a lot of hard conversations, I think. A lot of users don't like to hear that. So it's, to me, a lot of my work now is trying to look at fundamental, irreducible debates that exist in the scientific literature, build that type of uncertainty back into the modeling that we do, because I believe that's the type of uncertainty that exists in the climate change modeling we do, but then build decision frameworks that allow subjective attitudes to risk to be ingested and then recollapse the uncertainty. I think we're only just at the start of that journey as an industry. I think there's lots of great work to be able to actually aggregate up all of this uncertainty and collapse it in a very objective way. But to me, the uncertainty is so massive that objectivity is largely by the by, and there needs to be a lot of subjectivity in this decision-making process. I think on that same side, a lot of the conversation between the academic community here and the catastrophe modeling community is actually a little bit misdirected because of this level of uncertainty that exists in our modeling. And obviously it's compound between not just the hazard, but all of the exposure and vulnerability components that come. And without an ability to talk about where our sources of uncertainty come from and our key sensitivities in our models come from, it actually precludes a lot of the science from helping us answer meaningful questions about uncertainty too. So there's a big challenge here, and I believe that the whole idea of uncertainty is the actual fundamental one to getting meaningful and reliable climate change and even climate risk decisions out of these models.
Unfortunately, I think I completely agree, as you know, but I think the humans don't like dealing with uncertainty. They will try and avoid it at all costs. It's probably built into us of survival techniques. But Steve, you've dealt with this a lot and have some thoughts too. I mean, I don't know, what can you add to that?
Yeah, I mean, so I'm gonna try and find at least one thing where I disagree with everybody else on the panel, but this isn't it. I mean, I totally agree with Tom, but the current models really don't do a good job of uncertainty. That's because it's awkward, right? If you really put uncertainty in a model, the tail is going to get fatter, and nobody wants that, right? And you can't, for instance, a lot of people use the Poisson distribution for a lot of things in cat modeling because it's really convenient. I use it for a lot of things, but you have to get rid of the Poisson distribution if you're going to really represent uncertainty properly. I was just looking at something this morning. I was looking at how much climate change has already affected hurricane risk so far, right, relative to, say, the last 100 years, and trying to look at estimates of that. And even for such a straightforward kind of first question like that, depending on what source of information you look at, depending on what academic paper you look at, you can easily go from minus 30% to plus 50% or something like that on the average annual loss, I should say, US average annual loss. So yeah, that's a huge range of uncertainty, and it's absolutely crazy, and it is really hard to grapple with. And it's very tempting to just take the average and say, okay, the average is 5% or whatever it is, and just forget about the uncertainty. But the risk with that is that you get a big surprise. You might just get a big surprise because the models might just really change in 5 years' time. Or even worse, you might get a big surprise because you lose a lot of money, which is obviously even worse.
Cedric, do you want to know about more about uncertainty? And then I'll come to
you know what, again, I'm going to have to agree with everything that's been said so far. The piece around uncertainty, when you're looking to make decisions based on the output, it's the acknowledgement that this is just a best guess. I mean, it's quite interesting. Just in advance of coming on the panel this morning, I went back to what the PRA wrote as a result of the CBEST. We had a little bit of a joke and laugh about it earlier. But it's recognised the amount of uncertainty in these forward-looking projections. If people are making decisions based on data that has gaps, but also you're having to fill in some of those gaps with quite considerable assumptions, you're going to end up with the wrong result. And again, looking at it as a user of the model output, the challenge you will always have is how much can you actually rely on what those models are being produced. So the acknowledgement and recognition of the quantum of uncertainty that's in there is key.
Yes.
Yeah, I mean, sure, there's a lot of uncertainty. I feel like listening to my fellow panelists, you throw your hands up in the air and say, we know nothing. And I don't think that's right. I mean, we have physical theory, and that's really powerful. So I think the ways in which we're dealing with model uncertainty. So first of all, yes, don't give me the multi-model mean. So we try and condition our cat models on multiple climate models so that you can see a spread of what different models are telling you. And also, when you're looking then at particularly local changes, you often will see patterns where maybe it's getting wetter in one region and drier in another region. Does that make sense? So then we think about physical theory. So do we have a physical theory of why you might be seeing the changes that you do? And so I think there's techniques to get to a sensible answer. I don't think it's the case that we know nothing.
No. Well, I think that's certainly true. It's just, but I think there is a real challenge. I mean, there was a paper written by an ex-colleague of mine, probably 1999 actually, which talked about the uncertainty in US hurricane and how large it was at the tail. And the reaction from a lot of people at that stage was, if that's what the uncertainty is, I don't want to use a cat model. And I think, and that's and whilst that was 20 years ago, more than 20 years ago, there are a human nature which will sort of say, if there's a lot of uncertainty, then what's the point? And of course there is a point, but it may not be just going, I've still got an AAL, I'm going to use that. And I think where we have some deficiency right now is we don't have as much nuance around how to deal with that, and that's what. There's some people working on this right now, which will help you be helpful. But I also think that's where multi-models play a role, don't you think, Jess? That's one of the benefits of a sort of ensemble approach, would be to say, we don't know the answer, but we now have a better idea about the spread.
Oh, yeah, absolutely. I advocate for that. But going back to your example of the uncertainty and the hurricane risk, I feel like that tells you something, because if you have huge uncertainty, it means the signal isn't very strong, right? I mean, if you have a really, really strong climate change signal, like let's say extreme precipitation flooding, right? I mean, that's telling you that that there's a signal there, right? So you have less uncertainty about what the change might be. If you have tons of uncertainty, different climate models are giving you different answers. That means that the signal is weak, and that's information, I think. But yes, going back to your point about multi-models, I mean, I absolutely think that's the case, because what we see in our work is that individual climate models, perfectly reputable models from great agencies around the world, they don't agree in the magnitude of a change, and sometimes not even the sign. So
given all of that, what should the regulators do, and have they done the right thing, or could they do with a bit more help? Any who wants to kick off on that one?
I'm happy kicking off on that. So I'm going to probably say something that some people will nod and probably some will disagree. I think they need a lot of help. Personally, I particularly where it comes to climate risk, and as Tom knows, we've had engagements with the PRA. They're open to support. I don't think anyone's got an answer. You look at everything that comes out, there is this desire to engage and support, because if we don't support them, we may get taken down a route that will surprise everyone. And again, I don't think anyone has the answer. So the more people you get round, the more brains, the more experts who can give different views, different perspective, I think it can only benefit everyone. So that's my kind of tuppence.
I would throw one comment in on top of that, which is to say, I think it would be very useful to really clarify what the regulators want to get out of being involved in climate change. So why would they? I mean, even us, why would they be involved? Why would they talk about climate change, right? Do they even need to be involved in it at all? Maybe they don't. And if they do, then for what reason? Is it about solvency? Is it about raising awareness? Is it just about encouraging people to think about climate change or something? Which that latter one, I don't think you need to do. I mean, everyone's thinking about climate change, right? As I can tell right now. So people are going to think about it and are going to model it, whether the regulators are there or not, which is good, right? So why exactly? I think the regulators should really focus, figure out what is their role, what is the focus of what they're doing, be very, very specific about it, and preferably work together internationally. I mean, because what I hear from the big international companies is this is ending up being a huge headache. Well, it's like you said earlier on, Cedric, about your however many authors, 12 authors, whatever.
Yep.
I mean, and it can be a lot more than 12, right? As time goes on, so that's going to be a huge headache and waste of money unless it's really carefully orchestrated between the regulators.
One thing I will add, Steve, and again, shoot me down if you feel this is wrong. Regulators, in my experience, and I'm not saying just the PRA, this is a much broader one, they're often worried about themselves as well as the markets they're regulating. So there is that element of not wanting to get something wrong. So everyone knows about climate risk. It's all everywhere you turn, you've got those issues. I think there is an element, though, that they're looking forward. And when I say looking forward, they're looking at the potential impacts onto economies. So they're linking what banks are doing with what insurers are doing, with what life insurers are doing, what the asset portfolio is doing. I think there is an element of actually not wanting people to be caught by surprise, but at the same time trying to think what can they do better to manage the risks associated with it.
I mean, I think that we would. I mean, it's worth saying, and I'm glad you did say it, Steve. But I mean, clearly, if we have companies that are regulated by multiple regulators, and every regulator is asking a different type of question, that is just a organizational nightmare, and just means that firms around the world are going to be responding to the regulators more than thinking about the problem, and that's clearly counterproductive. But Jess, what about things like, are we using the right type of question for long-term future scenarios, or is there an improvement we can make there?
Yeah, I mean, I am seeing our clients struggle, the global clients struggle with many different requests from regulators across the globe. I think one client said they had 17 different requests that they needed to answer. And so obviously if different questions are being asked, then you spend your time spinning your wheels trying to do the analytics to support that answer. rather than thinking about the question, exactly as you said. So I agree. The problem is no one's coalesced on what exactly is the right question to ask. So to look at two very divergent perspectives, you've got the PRA, which in their CBES had quite specific variables that they specified, right? They really wanted you to calibrate to specific changes in precipitation or wind speed. On the other hand, we've got EIOPA, who's recommending one scenario of less than 2 degrees and another scenario of more than 2 degrees. So leaving it very open-ended for the user to decide. So I think there's still a push and pull and a debate going on about what's the best way. I personally prefer the EIOPA approach, where it's more open-ended. I think it's in the spirit of the ORSA, where individual firms should be responsible for their own risk. And so I prefer the technique which isn't over-prescribed, and leave it to firms to do the best analysis that they can, that they think is reasonable.
Yeah, so temperature is a better measuring technique than, say, RCP or SSP scenarios, because you can be more it's easier to be consistent because your question base is going to be independent of whatever. Is that sort of a statement true, do you think?
That's my personal preference. We can certainly discuss that. There are people who prefer an RCP approach. I just think it's simpler to understand. You know, we're producing scenarios for 1.5 degrees, 2 degrees, and 3 degrees. And really, at 1.5 degrees, there's no difference between the RCPs. I mean, they all hit it at around 2030. And in fact, it's not even until 2050 that the RCPs really diverge from each other. So I think it's just overcomplicating things to really specify an RCP. Not to mention that there aren't just RCPs out there. Of course, there's SSPs, and there's also the NGFS scenarios as well, which are totally different. So I think you can just wrap yourself up in knots if you go down the emission scenario route. So my personal preference is to do it on temperature.
And if I may, Steve, what about the techniques used for different types of questions, right? So we've got to do pricing and accumulation work, this week or even today, right? And we might be doing sort of investment decisions that go out much longer than that, and there may be strategy, which I don't know sits in between potentially. Have we got the solutions that are fit for the question that we have to be answering in this business, right? Do you think, on climate change?
I mean, if I were the regulator, I would tell people only to look at the effect of climate change so far, not even to look at 10 years, 20 years, 50 years, whether that's RCPs or degree C. I think the most important thing for insurers to grapple with is making sure that we understand climate change so far. So, floods in Germany last year, right? Looks like there was a big fingerprint of climate change in those floods. Did anyone really understand that before the flood came along? Is the industry really, the modelers and the industry in general, really grappling with the fact that risk has already changed, right? Because if you take 50 years of data and build a risk model, then your model is 25 years in the past, basically. And so, that directly affects underwriting, pricing, capital management, solvency, all the most important things. And I think these questions about, what might happen in 30 years' time. I mean, 30 years ago, I wasn't, who was thinking 30 years ago about what would be happening today? And even if they did, what would it matter, right? It wouldn't matter at all. So I don't think trying to look 30 years into the future has very much value, or I think it's much less valuable than trying to understand already what's going on.
Goes back to your earlier point, Steve, right, about what are we trying to do, and it does feel like there may be some value for like adaptation, questions for society, but certainly not for insurance. So I fully agree, and I mean, to extend it, I think, I've had a lot of conversation around the market. I was having one with Cedric this morning, the limit of quantified analysis for strategic business planning is probably around 5 years. It might be a little bit longer, but I haven't heard anyone talk about beyond 5 years. So I completely agree with Steve's point that it's about trying to quantify how much climate change is in your current book of business today. But at the same time, there's another extension we've got to make there that is often ignored, certainly is ignored in the requests at the moment, and that is the other two key components of exposure and vulnerability. And we know that looking back through time, while climate change has its fingerprints and very complex fingerprints, sometimes outsized, the vast majority of peril regions, the trends are driven in losses are driven primarily by exposure changes. Obviously, the CAT model should be picking that up, but they're very complex changes themselves. And isolating off climate change alone and not thinking about those other human pieces is a bit of a problem, I think.
Well, you know, I think that I'm sure, I hope we would agree with this, that we want the models that we use to be very good at understanding the hazard, including whatever signals that are available to be able to compute a changing the climate change we got. But they could also be seasonal changes. So, you know, when are we going to start using ENSO signals in these models? Because you'd think that should be possible. There's quite a lot of skill in some of that, and we want business interruption to be good, and we want exposure to be represented well, we want vulnerability to be represented well, and we need social inflation and other types of inflation to be part of that as well. Because if we exclude any of these things, it just creates less utility probably for the tools and models we're using. So I would completely agree. I just wonder, to Steve's point about, you know, what do we really know, and points we've all been making during the course of today, but to what extent is the role of academia not being fully utilized? Do they know enough about our business to be insightful? Do they know, are we using them well enough? I mean, there's a huge topic in this thing, but who wants to kick off on something about what we should be doing more with academia to help this? Steve, go on then.
Right, sorry, I don't want to say too much, but I mean, there's a huge gap, right? There's a huge gap between what academics do and what insurance companies need. Right now, that gap is filled by the people that you're all looking at on the screen, right? And the modeling companies and so on. We're all trying to fill that gap in various ways. Trying to get academics themselves to fill that gap or to move closer is very difficult. I mean, I've tried that many times over the last 20 years, and you know, they have their own agendas and their own world they live in, and ultimately they're not particularly, almost all of them are not particularly interested in doing studies which can directly feed into cat models. So I don't think we should expect them to, because, you know, in a way they are paid to do different things than that. I just think the focus for us should be how we fill that gap and trying to fill it in a slightly better way. And certainly that's the focus of what I'm doing. So it's a bit self-serving me saying that. But right now, you know, we might have dozens of different people filling that gap between academic research and what's relevant for insurance, filling that gap in different ways and coming up with many, many different answers. And I think we could bring more expertise, more science, more thought to how we convert academic research into what we need. That would be my comment.
I would go back the other way as well, right? I think we're starting to do a better job of it, but I don't think the academic community understands how much expertise actually sits here often, and actually sits within a lot of the modeling firms. Obviously, a lot of the people there, including, again, everybody on this call here, previously academics that have moved into this risk world and then learn about that. And unfortunately, for whatever reason, structures, companies, in the past, the exchange of knowledge back to universities, I don't think has happened, you know, particularly well. And so I do think there's also this sort of skew of what the public and, you know, what then academics actually think of themselves as effective experts in risk if they are an expert in hurricane hazard or precipitation hazard. And the reality to me is that they're absolutely not experts in risk, but they are the ones that are looked to comment on future risk. And I think the industry, which does contain these risk experts, needs to be much better at being vocal about its expertise and showing why.
I'm going to move on to one more topic, and we can then go back if we have time. But Tom, you mentioned something which I think was interesting, and I sit on a European group called Mission Adaptation, I think it's called, which is an EU group, and I was very interested about what they think, and adaptation as a phrase or as a word is being used a lot about this is the one way that society is going to change. And you reminded me that I think that's an interesting topic, and I want to come back to you in a second. But first, I want to ask Jessica, what do you think? Are we doing enough on understanding adaptation and mitigation? And do the models we have do enough in that space? What's missing there?
Yeah, I mean, it's clearly an important topic. And I think every time we talk about climate change and hazard on these panels, somebody always says, but what about adaptation? You know, vulnerability is changing, and that's true, and we should do work on it. I'm a little bit of a skeptic about how much adaptation we can actually do. You know, we still have Victorian drains in some cities in the UK. So how fast are we really going to change the built environment? I guess I would say. But clearly we should do the work, and the regulators are also starting to ask for this as part of their submission. So not just the hazard, but adaptation. It's a difficult problem because, of course, it's not just physics anymore. Now it's about social policy. It's about what will governments do, what will they fund, and it's also about what individuals will do. Because, you know, pulling on my experience working for a UK primary, when we were helping people rebuild from flood losses and we were offering them property level protection, they don't want it. People don't want a plastic kitchen. They don't want a wall socket in the middle of the wall. So, you know, it's how much are we really going to do, I guess, is my question.
Anybody else any thoughts on the adaptation thing? I think one thing I would say is the one thing that there are two things I say to people when they ask me about this. So one of them is we need to be able to encourage the best use of sea defenses and river defenses, because they are very obvious large-scale adaptation measures. And if the models we use incorporate the changes made in those things, then you get a feedback loop between people who do the right thing on putting up, say, river defenses in a certain village or town, and the risk being measured appropriately for those adaptation changes in the models we use. And that disconnect creates all sorts of problems around the world. And you can add in another favorite topic that's going on right now, which is looking at mangrove swamps and coral reefs, which have very large impacts on storm surge, for example. So I mean, those are the two obvious ones for me. The small scale ones might be more feasible to do, and I'm not sure models can really help us there. But yeah, no, I agree with that. So anybody else want to add anything on adaptation?
I was just going to say, you know, in a way, it's a great shame that the insurance industry has developed an enormous amount of expertise in risk modeling, but most of it is proprietary. Almost none of it has been published. And that means that it's very difficult for people who are interested in adaptation to use it. And one also might wonder whether, you know, I mean, risk models in the insurance industry are adjusted for all sorts of reasons. You know, they're adjusted so that they don't change too much from the previous model. They're adjusted so they match company expectations there, and so on and so forth, right? And those kinds of models, are they really suitable for adaptation? So I think in a way we need a new generation of models that are built, you know, much more open source, using Oasis, of course, Dickie, that people can then use more broadly to address adaptation questions, especially in the developing world.
Okay, so I think what we're going to do is we've got 6 minutes left, and I didn't give you any warning. Well, I'm giving you a warning now, I should say. I didn't give you a warning in advance. I think what we should try and do is each person got, you know, a minute essentially to say what's the thing we should be focusing on the most as a community interested in modeling risk and understanding climate change. And I know that's a tough question, but we might as well give it a go. And I think, Cedric, particularly for you, you know, I think you've got a different perspective from everybody else because to a degree you're a user more than everybody else who is in slightly different places, really, as a general rule. And before I do that, though, I just want to answer or make a comment on Matt, who put something in the chat about academia, you know, has a big push on engagement and impact, which I completely agree. And as you rightly point out, the UK, the UK Research Network is pushing on these things. And yes, that's true. So does, you know, Horizon does the same thing in Europe. And in most parts of the world, I think that happens, but it's still very hard to have these conversations. And I still think that despite funding going towards this, the incentives in academia are not well aligned with working with industry. And actually, to some degree, the incentives in industry don't seem to be working very well. So I think it's complex. But Matt, I just wanted to acknowledge your point and thank you for making that. So a minute-ish each. Who wants to kick off? Anybody in particular? Let's leave the last, I think.
We're never going to fix the incentives in academia, right? We've been trying for the last 20 years. You know, do you remember 2001? There was the tsunami project or whatever. You know, we're never going to change academics. We should give up trying, right? We should solve this. I mean, I'm serious. You know, as a pragmatic way forwards, right? If we want to get solutions in the next 5 or 10 years, we just need to do it ourselves. We just need to do it, right? We need to take the information that academics produce. I call it skip diving. You know. Take the information that academics produce, search through it, find the bits that are actually useful for risk modeling, take them out, fix them up, you know, and use them for risk modeling. That's what we need to do, and we just need to put our effort into that, and preferably publish it, because things move forward when people publish.
Okay, that's a good point. I like that. Steve, will you just have a look at the chat? Because I want you to answer the question from Nigel Winspear in a second, and as quickly as you can. Let's go, Jess, let's go to you next. What's the next? What should we be really focusing on next? That's my
yeah, you have put me on the spot, so I'll just say kind of what came to mind first. I mean, I do think climate change physical risk for cat models in the insurance industry, I think we've come a long, long way since 2019, let's say 2018. And I think we've solved a lot of problems. And I don't think we're in terrible shape, actually, even all of the issues that we've raised today. What really worries me is about the larger financial services sector, in that TCFD is now mandatory in the UK. The SEC is making new rules in the US. There's about to be many, many, many companies that need to answer the TCFD, that need to quantify their physical risk from climate change. And I doubt how well they understand these issues that we understand so well. And I know that there's a lot of vendor models, third parties that are trying to jump into this space. I think Steve made reference to some of them. Some of them have dubious methodology, in my view. So as a large scale issue for the world, I think that's one that we need to tackle.
good stuff. Tom, next.
So yeah, I think I'm going to agree with both Steve and Jessica, and I'm going to take a sort of tangent that's linked to both of them. So I think, yeah, on the academic side, I'd be less pessimistic that we can't use academia, but yeah, totally take the idea that the tools aren't necessarily perfect, but we can get there. So I'd just encourage people not to give up on that right away. But the thing that Jessica was saying about moving into these other financial sectors, I completely agree that actually on the physical risk side here, we are in, we're not in bad shape, and the models have allowed us to be not in bad shape. But I think we shouldn't take our eyes off the gaze. I think it's so easy, because our models are so well constrained in lots of ways, to think, okay, physical risk is where we're going to focus our efforts. But to me, actually, the concerning things are things beyond this, right? The transition risk, the liability risk, if we're thinking it from an industry perspective, the reputational risk that potentially exists. And we don't do a good job of looking at that enough. And it's just a natural bias to me, I think, that, okay, we've got good models here, so we're going to focus on the physical ones. We don't have models in other places, or good models in other places. And that, I feel that there are the black swans that we should be trying to capture, but possibly aren't.
Good point. I like that. So, Steve, I just want, before Cedric's going to finish, I just want you to see, is there any way you think you can answer that question? Did you see it?
No, I didn't know. I'm looking through the questions, but
Or maybe it came to me only. I'm going to read it out to you then, which won't give you any time at all, but that's like fine, because you're smart enough to be able to do with it. So it says, oh, it was to me directly, sorry. So it says, sorry to be controversial, but if we're unable to robustly say whether an event arrival distribution is reliable under today's climate, especially in the upper tail, at what point should we accept that we're unable to robustly project the same into the future?
yeah, well, I think it's just being honest, a question of being honest about the uncertainties around all of these things. I was looking the other day at the number of Cat 4/5 hurricanes you get every year in the Atlantic, right? How many do you think it is? Actually, I've forgotten the number, but here we go. It's 1.7, okay? But the error on that is plus or minus about 30%, right? And that's on current climate. So, you know, and then we just have to be honest that in 10 years' time, the error won't be plus or minus 30%, it'll be plus or minus 60%. And then we just have to deal with that, you know. I mean, Tom talked about decision making and so on, and how to make decisions under that kind of uncertainty, which is a difficult topic, but that is the thing that we're grappling with, isn't it? And per Jessica's point, I mean, there are some things which are more certain, right? Sea level rise, okay. You can, like, I've got a ruler here and I can predict sea level rise pretty well with my ruler. And it goes, actually, I don't know whether I should do it like that or that. But you know, sea level's going up. We know that, we can predict it. Temperature's going up. We know that, we can predict it pretty well. Rainfall is a lot more difficult. Hurricanes are a lot more difficult.
Excellent. Thank you. Cedric, finishes off. What do you want from the smart people we got on this panel that you're not getting right now?
It's a brilliant question. I think it really is a user of the data. It's how we can manage to fill the gaps. Now, that's a really difficult question, but there are so many assumptions that underpin all of the data that comes out. And as you project out to the future, those assumptions you're compounding as you look forward. It's understanding that. And that's my my one question, and I'm very lucky, we've got a very talented research team that does some great work. And I think the point earlier about sharing some of that information, we do actually, from a trans side, actually share some of our information on our website because it's important that it's out there. The one thing we haven't touched on, and it's kind of linked in with some of the data gaps, and I think it's just worth our highlighting, is the protection gap. I think right at the beginning, Dickie, you raised that point. And obviously, as we move towards ESG, one of the factors boards are looking at is how they can help with that protection gap. Some of the areas that are likely to be more affected by climate change are those that we don't really have good data on, to be honest. We don't really have good models available, and it's what the insurance industry is able to do to support that. So that's probably a completely different conversation for another time. But I think as the insurance industry is often the backbone that supports a lot of industries and people, I think it's how we can use these models to support helping those that really do need that support.
Great point to end with, and we're a couple of minutes over. My apologies, everybody. But I just lastly want to end with saying thank you to everybody. Thank you to Julia for the organisation, to Ben for doing this work, this fantastic panel. Cedric, thanks for your support on the IUA. It's been amazing. To all of you that are still here, most of you still are, please, if you want to continue this conversation, send us a note. We can help you continue it. It's a community. Next conference we're doing is on this book here, Pricing Methodology for Cat Business. And we're also doing a report with, or the Lightsource Network is, with Jeremy Hindle on what to do on climate change. So more in that space. Thanks all. That's it. Goodbye.
Okay, thank you.